This is the largest open-cut iron ore mine in the world. BHP has been digging out Australia's most lucrative commodity from Mount Whaleback in the Pilbara since 1968, and it's never been more valuable than now.
We've seen record prices, but we've also seen right across the resources sector that the expectation is in this year, in the midst of a world pandemic, we'll break all records for exports.
That record price was nudging $240 a tonne about a fortnight ago. Nice timing for BHP, as it's just opened its newest mine, South Flank, 140 kilometres from here. Further up the Great Northern Highway is the biggest producer of Pilbara iron ore, Rio Tinto. Despite the destruction of the Juukan Gorge caves a year ago, it's on track to export as much as 340 million tonnes this year. Here at Rio Tinto's port operations in Dampier, there's about 1.8 million tonnes of iron ore behind me, worth almost $500 million Australian dollars. Most of it is destined for China. When it comes to this red dirt, Australia and China's relationship is symbiotic. 70% of the iron ore we export goes to China, and 60% of what Beijing imports comes from us. If China slows down or speeds up its steel production, Australia feels it. In April, production hit a record high, sending iron ore prices soaring. This is what's driving Australia's economy. For every $10 increase to the price of iron ore, another $11 billion, or 0.6% of GDP, is added to Australia's annual export earnings. The record prices helped cut about $50 billion off the budget deficit, given the huge premium to the government's $55 a tonne forecast. While prices are volatile, the big players say they're in for the long haul.
Our focus really is on making sure that we build the strongest business that we can that's sustainable, regardless of the cycle or commodity prices at any given time.
Since the peak just 2 weeks ago, prices have slid about 20%.
What we've seen in terms of volatility just gives an idea of how quickly these prices can move.
But there's concern Australia's global iron ore dominance won't last forever. The world's second biggest producer, Brazil, will eventually return to levels seen before the 2019 Samarco dam collapse and the pandemic crippled its industry. And China's making it clear it wants to curb its reliance on Australia by increasing its own production and using recycled steel. It also has a majority stake in the Simandou site in West Africa, along with partner Rio Tinto. That's tipped to come online within the next decade.
We discovered Simandou back in the 90s and continuing to work with our partners in that project to find a creative way of bringing that to market.
Yeah, that's actually live feed, obviously. See some of those car dumpers.
Mining has come a long way since the first ore was dug out of the Pilbara more than 50 years ago. Fortescue Metals staff in East Perth are controlling trains around the clock as they dump ore at Port Hedland, 1,600 kilometres away. Each of these ore cars is carrying about 140 tonnes of iron ore, worth about $28,000. The whole train is carrying $7 million worth of iron ore, and up to 17 of these come through every 24 hours.
Australia's always been a nation that relies on trade, so it's critically important that we continue to nurture those strong trading relationships that are so fundamentally important to our economy.
As the producer of almost half of global seaborne iron ore, it won't be easy to knock Australia off top spot.
We account for such a large share that to displace Australia would take significant tons.
But with iron ore widely tipped to fall closer to $100 by the end of the year, that top spot just won't be worth as much.